Bitcoin
That's a way to close
funded.
out the week.
Yeah, I like those when we on the loan side and the real estate side. That
Yes,
always
sir.
works out.
You shake hands with both hands. You know what I'm saying?
That's the new one. Yeah, I like that. I like that one. What's going on? We're back again. Guytho the Great, Good Money Podcast.
What's up, people? Good Money Pal here. Good Money Podcast. Thanks for joining us yet again.
Yes, we're back. Had to change our date up a little this week. It's been a busy week all around the board.
Absolutely. It's been busy. The market did hit new all-time highs, but there seems to be quite a bit of news flow in the markets as of late, right? That's, some headlines, right? So we're seeing some geopolitical tensions, and that seems to be driving market down to the downside. So I would definitely say buckle up out there right now. But it's definitely a good time. If you haven't caught this last wave to the upside with the market, it's definitely a good time to take a look at maybe starting some positions and some names that you may have had your eyes on.
Yeah. I see Oracle took a small dip itself, So I guess they were saying that was based on profitability. So I know that's might be a time to get in.
Mm-hmm.
But what I'm really seeing, I'm seeing the good old boys moving around like the Avengers out there. You know what I mean? I'm seeing Jensen, Altman, Ellison, all this like they're on what they used to do, a promo run or something. They're on every podcast, they're really putting something together now.
Yeah, it's funny, fam. We did the podcast episode, with our colleague over at the Gold Brokerage Firm, right? And I think our timing was great because I started to see, some major news media outlets kind of follow suit with reports of, saying to people they should be putting 15% of their investable assets into gold,
Yeah.
So simultaneously, I did see a nice little pop on silver as well. I don't know if you've been paying attention to that.
Oh, yeah, I've definitely been paying attention to it. Since our gold episode, I've been watching it. And right now, gold is bouncing up there. It's still above that 4,000 mark. You know what I mean? It's staying up there right as of now.
Yeah, I would say, man, since August, silver has been on a run for the last 7 weeks. This is the first week that it's actually taken a break.
Yeah. It's another area to look into, silver. It's one of the precious metals. But what they call it, the yellow metal is really I hear they're saying that 2026 they're looking for 5,000, maybe 6,000 for gold.
Yeah, I don't see that I don't see that being an issue to achieve. And the reason why I say that with some confidence is that just the other day I saw a report saying that the buying capacity has diminished by about 10% this year. So and they're already forecasting another 10% decline in buying power for the U.S. dollar, right? So if the U.S. dollar is experiencing that kind of a pullback or that kind of volatility, to the downside, I can only imagine what other currencies are looking.
Gold is the hedge. I know Ray Dalio also said the 15%.
You saw that?
Yeah, I saw that. Yeah. I saw that. I was listening on that.
Yeah.
So, hey, we were on it a little early.
Yeah. Listen, I like being early to the party.
Yeah, there's nothing wrong with that.
I'm a fan of being early to the party. That's definitely, especially with something like gold.
Yeah, gold is definitely a great investment right now, and I see only upsides. As we discussed in the gold podcast, there's just so much things going on behind the scenes that are adding to the push for gold. With everybody looking to use it as a hedge, it's like you might as well get in and see where it takes you.
Absolutely, man. Anything in particular that you got on your radar that's caught your eye?
Not anything in particular. I'm kind of looking at the usual suspects. I'm looking a lot at everything that's going on with the AI, looking in that area, and of course looking at different energy stocks. I was looking at Cord a little bit. Yeah, I'm nothing really new, and then just to diversify, I grabbed up a couple of VTI, and other things just to put some extra money that I had. I took a lot of profit from some of my stocks that I was up 100% plus on, and I just grabbed some VTI, some more SPY. Just the average was that I constantly compound on, but I haven't really been looking much at anything new. I was wondering if it might be a good time for me to take a stake in Oracle, since I missed out on that first run, and I feel it's pretty much a lot of upside.
How would you approach it if you took a look at Oracle? You would approach it by stock, or would you approach it by options?
See, until you do this options class, you gave me my in. I had to take it.
All right, man. All right.
No, but as far as Oracle goes, I probably, because I really believe in the stock, so I'll probably get some for the long term, and then I definitely consider looking at the option side of it as well too. I know a lot of news that's been going around.
No, I was saying I'm just looking at, as far as options are concerned, man. If you're gonna look at options, we're in October, right? So you should be looking, especially if you're trying to look at it for long term, you should be looking at stuff options wise for like June or sometime late next year. You know what I mean?
Yeah.
You shouldn't be looking, if you're looking at it for the long term, you know what I'm saying? You shouldn't be looking at anything that's going to be expiring in the next couple of weeks, because I feel like we're about to enter a little period of volatility. The market has been on quite a run, just looking at the S&P 500, you know, looking at the S&P 500, right? It's just been like a stair step to the upside, and we
Mm-hmm.
haven't really had a major sharp pullback um, in quite some time, man. I think the last time we had a decline on the S&P 500 that was even worth mentioning was back end of July. You know
Yeah.
what I mean? So it's like I always feel like when people are getting a little too heavy on the hog, or they're sipping the Kool-Aid too strong, and you start seeing the stocks. I tell you about this stock, Farms, BTQ. And, I took a stab at it at like 6, and it went for a double. I think it went to $14 recently. So I'm taking profits on
Mm-hmm.
that one, and I'm saying to myself, this kind of feels a little crazy, man. I just bought this stock, and this thing went from $6 to $14, and
Nice.
so, and it's not just that one, So it's not even just like a situation where it's a fluke. You're seeing, at least a dozen of these names that nobody's ever heard of just go on these spectacular runs. So when I see stuff like that, I kind of take a little pause, because that's when you start to get the people that FOMO, and
Mm-hmm.
then these are the people who, they're not handling risk management properly. They don't properly position size into a trade. They just buy it because the stock was up 20% the day before, so they're hoping to get another 20% the
Yeah.
next day.
Catch the
There's no
tail
real
end.
fundamental analysis. There's no real technical analysis. There's nothing. There's just hope and a prayer. And this is just a recipe for trouble.
Yeah. Yeah. It's the balloon. Sometimes you got to let a little air out the balloon so it don't pop.
Right.
So we gotta look at it that way. It's definitely seen, as we saw today, a lot of retractment, and it's been a lot of stocks, I think, just riding off the AI wave, riding off what Nvidia, OpenAI, Oracle, and all of them are doing. So one thing I found interesting, and it was I see a lot of people reporting about it now, what they're calling the circle
Yeah.
between. So saying it's basically Nvidia invests in OpenAI. OpenAI buys clouds from Oracle, who buys chips from Nvidia, who then deals with CoreWeave, which also deals. So it's like they're passing the money around and around in a circle. So I know I see that coming up a lot online and everything. I'm just like, okay, I kind of see what these guys are doing. Like I said, they're on a press run right now.
Yeah. Yeah. I think I know what you're talking about, right? It speaks to the hardware, software, the VCs that are involved, and it talks about the market value. And some of these companies that you mentioned just recently came out with an IPO, right? Like what is this thing? CoreWeave, and CoreWeave got a major investment recently from NVIDIA, and it's like you said, right? OpenAI bought 160, they got authorization to buy up to 160 million shares worth of AMD,
Yeah,
so it's definitely a pass around party going on right now. That's for sure.
yeah. Seems OpenAI is kind of throwing money in a lot of directions between Nvidia, AMD, and it's like they're all coming together. And I know it's saying, the reason they're doing this is because it's going to be so much computing and so many GPU needed that everybody's product is going to get used. So everybody's going to make money. So it
Right.
seems like they're all banding together. And it's funny because I know NVIDIA also is investing in Intel as
Okay.
well. So I'm watching that. And, I think there's been a long going feud between the two. So that was kind of strange to see. And it's like, okay, they're putting aside their differences and working together. So again, I keep seeing something big coming, and everybody, all the heads putting themselves together to build something.
Yeah, but you know what? While everybody's talking about the AI space, man, I couldn't help but notice. I couldn't help but notice Victoria's Secret starting to pop to the upside, right? The lingerie wear company.
Vicky Secrets, huh?
Yeah, yeah, yeah. So Victoria, so there's some date nights going on. Something's happening out there because there's love in the air because it's gone from 20 to about $30 a share in very short order.
You sure it's
So
not these OnlyFan models, man?
I don't know nothing about no OnlyFans, man. I'm a married man. You know what I'm saying? I see talks of the internet, and this particular business is doing rather well, and I applaud those people who have managed to monetize their unique gifts. Yeah, we do loans over here. We don't do that. Only
Exactly.
loans, only
Only
loans.
loans. Loans and real estate. Loans and real estate.
Right, right, right. Yeah, but yeah, that one.
But
No,
yeah,
in all
I see the
seriousness, that
jump.
popped. You see it,
I
right?
see it. Yeah. Uh-huh.
Yeah. So that's experiencing a nice little erection there, the last 3 months, looking good. It's a
Yeah,
good
nice
look.
play on words. But
Yeah.
let me ask you a question. What would cause you to, because something like Victoria's Secrets wouldn't even be on my radar.
Right.
What would make you even look that way or think to open up that book and see where that's at?
Unusual options activity,
Mm,
right? That goes back to options again. So unusual options activity, right? And so unusual volume rather. And then
okay.
what happens is when you see unusual volume in a stock that nobody really is talking about, what I'm looking
Mm,
for is I'm looking for the amount of contracts that were purchased, the amount of dollars that were put into that particular position in the expiration. And then that prompts me to then go take a look at the chart, right? So I could kind of so I can kind of frame my mind around what that particular trader or traders were thinking when they took that position in size, right? Because options are a funny thing where, it can expire worthless. You can lose every dime, right? So if somebody's sticking, seven figures into a position, I'm hoping that it has some time as far as expiration is concerned.
yeah.
Yeah, but I have to imagine that that is not the general public that's buying positions of that size, you know,
Got it.
for Victoria's Secret. But looking at the chart, zooming out on a monthly basis, it looks like we're seeing higher lows, and once you start to see higher lows, it's only a matter of time before you get a break to the upside, right? So that break,
Yeah.
I want to say, came around August, and that took out about 4 months of highs, and so it's just continued its path to the upside, and so it's traded back to levels that it was at.
Yes. I
It's
see a
right
year
back to where it
ago.
was at. Yeah, it's right back to where it was at October 2024.
Mm-hmm. Yeah. See, it has a yearly high of almost 40, and it's
hmm
inching towards there. So yeah, that definitely looks good. Right now,
So
I was
that,
just curious because that wasn't even on my radar. I
yeah,
wouldn't even have thought of Victoria's Secrets as a stock to look at right
yeah,
now.
and listen, man. At the end of the day, when you make your profits in the stock market and you go to spend that money on your family or whatever have you, they're not asking you which stock that you bought, or at least the merchant that you're spending the money at is not asking you where you made that money with it.
Uh-huh.
They just want to make sure that the transaction clears. You know what I'm saying? But if you had to ask me what one of my favorite stocks is right now, and what I've been doing pretty good in, even though it's pulled back today, I still love it, is SoFi.
So
SoFi has
far.
been, yeah, SoFi Technologies. It's a multi-services platform. They offer mortgages. They offer personal financial services. They offer a whole suite of services, SoFi, right? So SoFi is having just a rock star year, man. And I
Yeah,
think that
yeah,
trend is going to
definitely.
continue. I believe there's like a sports stadium, if I'm not mistaken, that's named after SoFi. No, double check.
Let's check it out. Yeah.
Yep, Inglewood, California. Yep, SoFi Stadium.
Inglewood. Yep, I
Yep,
see it.
Inglewood up to no good.
So you're more so this is a options trade that you're
Both.
using?
Both. I've
Both.
got leaps. Yeah, I've got leaps, right? So I've got leaps in this trade, and I've got common stock. And so on the common stock, I've been selling premium. I've been writing covered calls, like we have talked about. As
Mm-hmm.
far as
Mm-hmm.
I should have wrote some calls today, because like I said earlier this morning, before we had started recording earlier this morning, I was telling you I was in the gym, and the market was looking real good this morning. I'm saying to myself, we got somewhat of a 3-day weekend, even though Monday the stock market is open, but the bond market is closed. I'm thinking long weekend, because kids are going to be out of school. You know what I'm saying? So I'm like, so take some profit. So I started selling some stuff, but on the SoFi, I'm not worried about my leaps. If anything, I'd be buying more, right? There's an opportunity to add to that position, right? And so my expiration is a long ways out. I don't plan on touching those for a while. And as far as the common stock is concerned, I'm on a recurring basis with that,
Got
on SoFi. That's definitely something to keep on the radar.
SoFi. Okay, that's locked in. Let me ask you a question too. How do you feel, or where do you stand as far as like the real estate rates, the real estate stocks?
That depends on what particular sector, man, because when you talk real estate stocks, you got the financial companies, right? Like the mortgage companies that we talked about. I also took a position, I had a position earlier this year, took profits on it when it ran towards 21, and then it came back down to 16, and now I'm back in it again. That's Rocket Mortgage.
Yes, yes, you had
Yeah.
spoke about that.
Yeah,
Yeah,
we've talked
yeah.
about Rocket Mortgage, right? So Rocket Mortgage looks like that's curling up, even though the market is not having the best day today, Friday, but it looks like that's pushing to the upside, and that's moving in the right direction by way of the Loan Depot that I talk about all the time, right? Loan Depot is a company
Yes,
I got a
yes.
position in.
And
Rocket
that's the
Mortgage,
one
I got
that's
loans.
with
What's
Rocket
that?
Mortgage. The Loan Depot is not associated with Rocket Mortgage, is it?
No, two different companies. Yeah, two
No,
different companies.
two different. Yeah, definitely.
But
Okay,
here's the thing about Rocket Mortgage. Mr. Cooper, they acquired Rocket
that's what it
Mortgage.
was.
Yeah, so Rocket
That's
Mortgage
what I was thinking of.
acquired Mr. Cooper. Yeah,
Yeah, we
you
spoke
know,
on that.
yeah.
Yeah, I was
So
just asking because I was. How do you say? I always get the word wrong. How do you pronounce it? REIT, right? REIT
REIT. No,
stocks.
you
The
got it. It's REIT.
REIT.
Yeah, real estate and that's just an acronym. It's a real estate investment trust, right? REIT. Yeah.
So I was looking at those as far as dividend wise. So
Okay.
are you? Is that something that you work through a lot? Anything with the dividends in that area?
Yeah. So for the REITs, right?
Mm-hmm.
There's a REIT that I like a lot, and that's the Realty Income Corporation, and I like that
Okay.
one
Yes, I
because
know that.
that one pays monthly, right, by way of a
Mm-hmm.
dividend. So from a financial planning perspective, it's a good company to look at, as far as planning your estate is concerned. And the reason I say that is because it's a dividend aristocrat, right? For those of you who don't know what a dividend aristocrat is, or that phrase for companies, that's a company that has been paying out dividends in excess of 25 years. Not
Yes.
only have they been paying out dividends in excess of 25 years, but they've increased those dividends. So you've got stable dividends plus an increase in dividends. And so this particular company, the Realty Income Corporation, has been paying for the last 25, and they've been increasing that dividend.
Yeah, I think that's definitely something that when you're looking into dividend stocks or REITs, anything like that, you definitely want to look at the history, make sure that they have a long-standing history of paying dividends, and to look to see if there's any growth. I know there's some companies that after a while, when things go bad, they just either cut the dividends or stop them altogether. So you always want to look into companies that
Yeah.
have a good history. That's where I think for my oldest daughter in her portfolio, I have a lot of dividend stocks because a lot of stuff in there are just put in there and for probably another 10, 15 years before it'll even be touched. So I like to fill that with different dividend stocks, whether in the energy sector, whether with the REITs or different ones, even stocks like Apple or One Oak that gives dividends. So I like to try to keep her portfolio filled with a lot of dividend earning stocks.
Yeah. And then what you got to watch for And it's great for the kids, right? It's great for the kids because you could have conversation with your children and say, okay, this particular company pays a dividend, but they only pay once every 90 days, right? Or this particular company only pays dividends, every 6 months. And then you've got some companies like the Realty Income Corporation that pay monthly, right? And so you've got a couple of different ways to look at it. Typically, the people who invest in that company, the Realty Income Corporation, they're relying on that cash flow because it pays out monthly. Distributions are monthly, right? So that's somebody who probably has a large lump sum of cash, and rather than parking it in a bank account that's not paying that much, they would park it in something like this and get that cash flow from it, so they don't diminish their principal, right? And
Yeah.
kind of use that cash flow to live on.
Yeah, that's definitely something that I just been building on.
One thing that I think is extremely important for people to know is when they're looking at stocks that pay dividends, you have to be mindful about the dividend payout ratio, right? Because that basically says if a company declares that they're going to pay a dividend, you want to see how often they've actually paid out the dividend. Because if a company runs into trouble by way of their cash flow or operations, they will pause the dividend, right? So I'll give you an example of this. During COVID, Disney paused the dividend. You know what I mean?
Few companies did.
But the thing is with Disney, that one, yes, a few companies did, but that's the one that's most memorable for me because that caused a whole bunch of ruckus. People were highly upset about Disney pausing that dividend. That made waves. So that told me when I saw the reaction to people, as far as Disney pausing that dividend, that made me realize, wow, a lot of people really rely on these dividends for cash flow.
Some
Yeah,
people have so much dividends coming in. That's their cash flow.
that's
That's
their
their
income.
monthly. Yeah, that's their income. That's their monthly
Yeah,
income.
yep.
Exactly.
And the reason why people do that, right? The reason why people park a lot of money in dividend paying stocks is because you get preferential tax treatment when your income comes from dividends versus earned income, right? Just a little disclosure. I'm not a tax professional. I'm not a CPA. You want to confirm this, you should have a conversation with your CPA. But as far as I know, dividends are taxed at a 15% tax rate. And then, every now and again, when these guys get on the campaign trail, they're going to run for office.
Mm.
You'll hear conversations about, oh, we want to raise the tax, the tax percentage on dividends, and that'll cause an uproar.
Yeah. They don't like that.
Yeah, they don't like that. Yeah, listen, they don't like that, not at all. So yeah, man. As far as the dividend stocks are concerned, that's part of the reason why when you find a good company that has a good growth story tied to it, and they can talk about paying a dividend, it's good, man, because you accumulate a large position in it, and then all of a sudden they decide to pay out dividends, and now you have a bunch of shares, and you weren't counting on receiving a dividend, but now they're saying we've announced that we're paying a dividend. If a company's been around for 10 plus years and all of a sudden they announce that they're going to pay a dividend, you got to
Mm.
take that seriously because you have to take that seriously because once you make that announcement, the cat's out the bag. You cannot now backtrack that. Or if you do backtrack that, the results are going to be detrimental to your company stock, right? Because
Hmm.
the word dividend just kind of speaks to long term. You know what I'm saying? The whole reason people want to own the shares if they're paying the dividend is for the long term cash flow. So when you announce that you're paying a dividend, that's a serious thing. And so
Yeah.
when I saw that Meta, formerly known as Facebook, when they announced the dividend, because they pay a dividend now. And when they announced the dividend, I was like, oh wow, that's dope. That means that they've really, really tightened up their business and they feel confident enough their business as far as advertisers are concerned, they feel confident enough to be able to continue paying out those dividends, on a long-term basis.
I know at one point with the dividends, I was messing around with the what are they called? The high yield dividends stocks, was talking to different people, and they were like, yeah, getting on the high yield dividend stocks. And, again, with anything that comes like that, there's always risk. You know what I mean? And it was one of those things that
Yeah.
was good until it wasn't.
Yep.
So,
Yep.
but, so that was another area that it was really big for a while. And I made a lot of money with some high yield dividend stocks, and I saw a lot of money coming in, but we put so much money into it to get those high yield dividends. But then you have to watch it because it'll do that drop, and then everything that you made in dividends will be erased anyway when that drops. So that's another thing. Like I said, I went to college the hard way.
The school of hard stocks.
Yeah, school. right. But again, it was good until it wasn't. You know what I mean? But I was able to recover. So I know there's a lot of YouTube videos and different things about these high yield dividend stocks, and you can make great money with them. You could but you definitely have to be aware and do your due diligence and keep your eye on it, because the volatility and the risk is very high with them.
Yes, it's shiny object syndrome. It's like, oh wow, they're paying a 40% dividend. You don't raise an eyebrow to that? You don't think that's unsustainable for them to pay out 40% of their net cash flow to investors just because you held the position, and you think they can do that in perpetuity?
Yeah.
So
Be honest, I got in when I had it to the point where I was making about $1.50 a week.
yeah, no,
You know what I mean? And it was just coming in. But once I saw it drop, I was like, whoa, I just lost like 300 in one day. All right, I'm out of here.
right.
I'm good on this. But at that time, I knew that once I seen that drop, just pull out and figure something else out. But like you said, it's that, you see that shiny object and you go for it real quick. So you got to definitely, it's one of those buyer beware situations.
The high yield dividend situation I saw was really prevalent with the mortgage REITs, where they were taking mortgage-backed securities and packaging them up, right? And what would happen is these mortgage REITs were paying 9, 10% dividends, 11% dividends, one time 14% dividends, right? One in particular, ticker symbol AGNC, mortgage REIT, was paying, I think it was like a 14% dividend. And, I'm just warning people. I'm like, hey, you should watch out for that, because it's in the name, mortgage REIT. So that means that the underlying asset is a mortgage, which is subject to fluctuating, interest rates and changes that are outside of the control of the mortgage company.
Yeah. Yep.
And so people have to tend to learn the hard way, So a couple of things to watch out for. One, that's the dividend payout ratio. Two, the beta, or the measure of volatility of the actual underlying stock of the company that's paying that particular dividend, right?
Yeah.
And then, it doesn't hurt to pick up a quarterly earnings report or annual earnings report and look at the company's actual numbers, like read it.
Yeah.
You know what I mean? Yeah, read, see what's going on. And now you in an age where you don't have to get bogged down with a 40-page quarterly earning report or a 40-page annual report. You could take that annual report and probably pop it into Chat GPT, right? Or the AI, and just be like, hey, summarize this for me. And then actually have the AI dissect the report for you based on what it is that you're looking for out of that report, right? Because one investor reading that report may be looking for one thing, and another investor may be looking for something else, right?
Definitely. Even now with the AI, with
there we go with that AI again, man.
Listen, man, this is like, I'm just so astounded with it. Like, I got Chat GPT Pulse. I don't know who's aware of it. They have a new part of Chat GPT where it's the Pulse, where I could basically tell it what I want every day. Like, I want 5:30 in the morning. I want to know what's going on in real estate. I want to know what's going on with these stocks. I give it a broad basis, and it also interprets all my other searches. And every day it gives me a full breakdown of everything that I want to know, that I want to learn about, that I'm interested in. And it just gives me a full breakdown right in front of me. So I've been using that a lot, and it's definitely very helpful. I even use some of the agents, my Pursue PA.Homes website, and with the real estate too. But so what else you see going on as far as the real estate and the real estate market and things? I know you were saying
I'm
that there
seeing
was
I'm
up.
seeing an uptick in foreclosures. I'm seeing an uptick in distressed properties. Yeah. I'm seeing an uptick in distressed properties. I'm seeing that certain borrowers in different credit boxes are being impacted, right? So the borrowers who were sitting in the best credit box, like a 780 plus, you know,
Mhm.
those credit boxes, they're starting to experience latenesses, and I'm noticing that the lenders are shifting their loan programs to accommodate what we're seeing out in the real estate market. So I know, as far as I'm concerned, on the DSCR side, I can go down to a 640 now on the DSCR side.
640 as far as a credit. So
Yeah.
so you think they're getting a little stricter though? I know they're allowing lower credits, but you think they're getting a little stricter of what loans or what they're accepting as far?
I would say that certain markets they're not fans of, you know.
Hmm.
I would say that it's harder to get deals done in Brooklyn. I'm here on Long Island, right? So I'm not far from Brooklyn, but I'm just
Yeah.
saying it's harder to get deals done in the Brooklyn market. I don't know if you saw, there was an article. I saw it last night. A lot of people talking about it on social media today, and are probably going to continue to talk about it over the weekend. A family suffered deed theft because the owner of a Harlem brownstone had passed away, and the people who inherited the property, the family that inherited the property, they got connected to some swindlers, and these people managed to execute deed theft and obtain a construction loan on a property that they didn't own. And I don't think they did it with any cash out of their pocket. I think they were able to get vested title on the deed and then use the equity in the property to satisfy whatever down payment and closing costs were required, and obtain the construction loan on a property that was not theirs.
Yeah. So how were they able to do that?
I have some theories. I have some theories. There's definitely some signatures that were forged. You
Yeah,
know,
that's what I'm saying. It has to be some type of forged signatures or, some misleading information.
yeah, definitely not a strong title company, if I had to say so myself. Right?
Yeah, title company plays a big part when you're getting these deals to the table and closed. I
Yeah.
know we've had some hurdles ourselves. I know today was a rough one, but we made it happen. But between title and a client that just wanted everything his way, but we made it happen. But yeah, that's very unfortunate, and it happens, right? People
It's
find their
almost like
way
you had
around
another
everything.
child, right? They want it their way all the time. Then they ask you about your fees, and then you say, "Well, how am I going to keep my lights on?"
We're not going to get into that because we could go forever. But we love all our clients, everybody that
Yes, we
chooses to
love
do
you.
business with us. We appreciate everybody that sits at the table and gets things done. We'll
That's
keep
it.
it at that.
Special shout out to the clients. We love each and every one of you.
Definitely.
Take it easy on us. We got to eat too.
Oh man. What
Yeah,
else
but
you want to
just
touch
looking
on?
at the market wrap, for this week, right? I mean, 10 o'clock Eastern, I want to say 10 o'clock Eastern, our time, is where I saw a shift as far as the market is concerned,
Hmm.
within the first half hour of trade. And then the headlines talked about tensions between US and China, which spurred a dash to, treasuries and gold, right? So S&P
Back to
500 closed
gold.
down about 2%. And then we saw our commander in chief come out with threats of, you know, elevated tariffs. Is that T word? Tariffs. You know what I'm saying? The tariffs on China. So crypto took a hit today.
Crypto took a
Stocks, of
big hit.
course. Yeah,
Everything.
yeah,
It's funny, and I just look at everything as a funny. I just see everything very comical. You have our the administration, and you have the back and forth with China. And I just look at it like a friend of mine, we were just talking comic books. I'm like, yeah, it's the Avengers versus Doctor Doom. China's Doctor Doom. And then you got the president, and he's getting his team, his Avengers together. He got all the AI guys together. And it's like a back and forth war going on. It's almost
yeah,
like the war for space or a nuclear war, the war for nuclear power going
yeah,
all over again. You know what I mean? It's like he wants everything to be built on American backbone as far as the AI infrastructure and all of that. and trying to get there before China. And it's just a big battle. And again, like you said, every time something comes out, it affects the market, it affects everything that's going on.
He's been a billionaire for a long time, and some of these people that he calls friends and colleagues and constituents have been rich for a very long time. So, they don't relate to, the common consumer who sees their grocery bills jump 20, 30%. I had to pick up one of my sons from school early today, and he told me that the school lunch went up by 50%.
Wow, I hope they're getting better school lunch than we were getting.
No, he told me about the school lunch today. I was actually impressed. I was like, wow, all right. It wasn't like
Okay.
that when we was coming up.
Not at all.
Nah, but I mean, inflation everywhere, right? And so it's like this. It's not that the cost of goods is going up because the dollars that it takes to buy the same goods are going down in value, right? So it's really the diminishing buying power of the actual US dollar. So it goes circle back to what I said earlier in the episode is that the reports are is that the dollar has diminished by 10% in value, the US dollar, right? So if you watch, when you see reports of the dollar falling or the buying power of the dollar falling or just inflation in general, right? You'll notice that certain other asset classes are going up in value, right? And the reason for that is very simple. There's a finite supply of those assets that are going up, namely gold and Bitcoin, right?
Bitcoin.
Especially Bitcoin. Bitcoin has a hard limited supply, at least as far as we know, right? The gold supply increases naturally by 2% a year just through mining activities. 2% a year increase in supply as far as the gold is concerned. So there is light inflationary pressure on gold, but there isn't that inflationary pressure on Bitcoin because Bitcoin's got a limited supply. So what you're seeing is as more dollars come into the market just by way of the Fed Reserve's natural activities, as more dollars come into the market, those dollars are literally shifted into those asset classes, especially when you got, somebody like a Ray Dalio, who's highly respected in the
Mm-hmm.
world of financial services, highly respected. And he comes out and says that you should have 15% of your investable assets in gold. There's naturally going to be a gold rush. And people are probably going to beg, borrow, steal, or work overtime, or go get the money by any means they can to go buy some of
Some
those
gold.
assets, right?
Yeah.
I was just kind of tying it all into real estate. I was talking to one of my clients today that I'm doing a couple of DSCR loans for. And, we were talking about, the DSCR ratio, the ratio, meaning, for every dollar of debt that they're bringing in or, for every dollar of debt that they have, the mortgage is covering said dollar of debt, right? So if they're bringing in, just to use easy numbers, $1,000 a month and the mortgage is 1,000, the DSCR is of 1, right? But this particular investor was bringing in a 1.5 on their ratio. So that means, for all intents and purposes, they're left with 50 cents after they pay all their bills for every
Yeah.
dollar, right? So I said to that investor, I said, what do you do with this excess cash? It sits in the bank, right? But the problem with that is that the buying power of the US dollar has diminished by 10% this year, and they're forecasting 10% next year. And if they're forecasting 10% next year, the probability is that it'll be in excess of 10% next year. It'll probably be more.
Yeah.
So that's when I recommended to them that, hey, it probably would be a good idea if I connected you to my gold guy. Because if you didn't need that extra 50 cents right now, right, theoretically, you can use gold as a treasury reserve asset for your real estate business, and gold is going up in value, and you're collecting your rents, and now your tenants and the cash flow are funding your gold reserves, for your real estate business. And you could take the same approach with Bitcoin or silver.
Yeah, definitely. I know it was saying that BlackRock was expanding their investments in Bitcoin, AI, and gold. That's where and stepping away from the dollar as well. So it's like everywhere they're everywhere stepping away from the dollar and trying to find other places to put their money while we go through whatever we're going through.
It is no longer it's no longer a currency that you can park money in for the long term. just doesn't work, you know? And what happens is it doesn't work because there's been these periods over time where the production of dollars just has gone haywire, right? They're just producing an insane amount of dollars. They're just printing money. They print, like I'm looking at these reports now. You see for New York, I don't know if you heard this out there, but in New York, they're talking about issuing these checks to people, $1,500 stimulus checks. It's an inflation check. So where did that money come from?
Back to the stimulus checks.
Did
Everybody
you?
was so happy about the stimulus check, but they weren't happy about what the repercussions of it.
It's like, you ever watch those commercials? Like you're watching a good show and a commercial comes on and you see like a prescription medicine come on. And then it's like,
Right.
oh, that actually sounds like a pretty good medicine. And then you hear the side effects.
Side effects, yeah. Yeah, like why
And then,
would
and
you
then
even take that?
yo,
Why?
and then, and then they rattle off the side effects and they rattle it off mad fast. You know what I'm saying? So like it's
Mm-hmm.
like you can't catch it. And you're like, you know what? The juice isn't worth the squeeze. You know what I'm saying? And it's like that with this free money. And so now I saw unemployment checks. Now they're talking about unemployment checks out here are gonna be
Wow.
$850
Yeah.
a week.
They brought it up. They brought unemployment up. Yeah, I saw that as well.
So when they do these things, that's an indication. When they do these things, that's an indication that the government is responding to what they see. Any local government at the local level is responding to what they see. You know, if they're seeing that the consumer is hurting because they're the ones who manage these programs, right? We're talking about like Section 8, things of that sort. So if they're managing these programs and they're noticing that people are leaning on them a lot more than they typically do, their response is, oh, well, you know, we're going to issue a stimulus check because they're looking at all these economic reports, right? They're looking at the
Yeah.
jobs numbers. They're looking at personal incomes. They're looking at the credit scores. So they're looking at everything. They're looking at car repos. They're looking at foreclosure rates.
And
You know,
everything.
yeah. So if they're responding that way, that's the only tool that they have to deploy. But us as investors have to look at that and say, you know what? If they just keep handing out this money, I mean, listen, like, you know, we don't have unlimited Kool-Aid, right? We got people keep showing up to the party and we don't got unlimited Kool-Aid. So we're going to have to make more Kool-Aid and we don't got no more concentrate. So we got to water it down now. And it's still Kool-Aid, but it don't taste the same as it did last week or last month. This Kool-Aid is watered down. But you know what? We're going to keep drinking it because we're thirsty.
We're thirsty, we need it, right? And you're getting all that money on the front end, but you always got to pay for it on the back end.
Yeah, yeah. And there's a lot of kicking the can as far as government is concerned, right? And that's when you hear talks about, Social Security running out. One thing I want to cover at length, you know what I mean? I don't think we'll do it on this episode, but one thing I want to cover at length is a concept called longevity risk. This is
Yeah,
the
break
concept
that
of
down.
running out of money in retirement.
Yeah, that's a big thing that a lot of
Yeah,
people are going through.
yeah,
A lot of people are going through. A lot of people have their social security, their retirement funds, and it's not enough to sustain their living after they stop. So, like you see a lot of older people taking these jobs at, the neighborhood
crazy.
Walgreens or McDonald's or Dunkin' Donuts.
And you know what? It's very dangerous because at that point, when they're retired, is when they're most at risk, right? Because here's what's happening. Not only are they facing increased cost of living, right? They didn't calculate for that. But another thing that caught them was property tax increases or
Inflation.
insurance. Yeah, insurance increases, right? So there's inflation on that end. And on the property tax side, that's the municipality that's feeling the pressures on their own because the cost of operating their municipality has gone up. So they're going to pass that off to the taxpayer, right? And that taxpayer probably has a house that's owned free and clear. They've been in the house forever. They've owned it free and clear, but now their property taxes have gone up 40%.
Yeah.
Got a friend of mine over in PA when he bought, in East Stroudsburg, if you know the area. When
Yeah,
he
definitely.
bought in, you know the area?
Huh? Yep.
Yeah. So when he bought over there, he told me his property tax was like $6,000 when he bought over there a few years ago. Not
Mm.
like over 10 years ago either. Like we're talking like, 6, 7 years ago. his taxes jumped to like $14,000.
Yeah, you know what it is. Strasburg and over there, they like to call that little New York out here.
Little New
So
York, that's exactly it.
they
Yeah, that's
follow New
exactly it.
York, and because of that, they get the New York type taxes and fees and stuff like that. Hey man, I'm not even going to disclose it, but if I tell you what I pay in taxes for my property out here a year, you're just gonna
That's
look
why
at me
you in
like I'm
Italy.
crazy.
That's why you in Italy and Rome, hopping around different European countries, riding on
Listen,
horses and
listen,
sailing on
brother.
boats.
The best financial decision that I made in my life was getting the fuck out of New York. Pardon me, was getting out of New York. That was the best financial decision I could have ever made in my life, to be
Yeah.
honest with you. Yeah,
Wow.
definitely. Definitely.
Yeah, man, it's funny that you mentioned that. Man. I've been close to pulling the trigger a lot, a lot of times leaving New York. But the thing is that it's like, I don't know, man. Like, I flirted with down south in Georgia and then everything's too far away. I looked at Florida, threw that out the window. I said, no way. Now they got it's an open carry state. I got 4 black sons. Nah, I can't go.
Yeah, I did both of those areas too. You know, my family's in Georgia.
Yeah,
Did
yeah,
Georgia. Florida was another option. You know,
yeah.
I actually lived in Florida for like 3 years.
How'd you like it?
I didn't. I didn't really like Florida much, you know. But again, the time I was living down there, I was a completely different person. You know what I mean? So different mind state, different things. But again, I go down there now and it's expensive. It's like
Yeah. Oh,
and
oh no, listen. Florida is not sweet no more. It's not a situation where, it's cheap to live there, whatever have you. Nah.
insurance
You
is
want somewhere
skyrocketed.
you want somewhere cheap to live, you're gonna have to go to like Mississippi or something.
Listen, I'm not mad at where we are now. You know what I mean? It's allowed us a lot of freedom. You know, it works. You know what I mean? So sometimes you got to, you know, depending on your situation and how you move, sometimes the best move is to step away. You know, I guess a lot of people get too comfortable in their situation. Like it's the state of mind that a lot of people are in. You know what I mean? Again, like I said, I think that was my best financial decision. It's actually the first time we came out here, it was like, I would never live out there. You know what I mean? We came to visit a friend. I was like, never, never. But then he started buying real estate and all this, and he wanted to bring me on in the deal. And I'm like, how much? And I was like, all right. Then we ended up finding a house. We're like, you know what? We're taking that move. My daughter was about to be born. My daughter was actually just born, and before she turned 1, we were out in New York.
Nice.
But that being said, let me ask you this: so with everything going on, you know, the drop of the dollar, the inflation, and everything so high. What would you give to somebody as advice? You know, somebody looking to figure it out, try to figure out what's their next move, their next step. You know, whether it's somebody that might have, however way they had to, got a little 10, 15 grand stashed away, or even somebody that saved their tax return checks and maybe sitting on 10 or 15,000. How would you suggest they deploy that money as into, start, I know it's not much, but at least start a foundation that could be grown, throughout time.
I would say if somebody had $10,000 to $15,000 to start, I would say the first thing they need to do is invest in themselves by way of education. That's the first thing. And I don't mean it from a standpoint of traditional education, like, oh, now it's time to go to college, because I don't know what college you're gonna go to with 10 to 15,000. I'm just saying by way of, you might have to connect with a mentor. You know what I'm saying? There's some books that you need to purchase, but you really got to take this thing seriously in terms of learning about financial instruments and why things are impacted as far as finances are concerned. Ignorance is not bliss. Ignorance is not an excuse. You know what I'm saying?
Especially if you
And I'm
can't
seeing a
afford
lot
it.
of people, dude, I'm seeing so many people, man, I can't tell you. I'm seeing so many people who are being impacted by decisions that are being made by people in boardrooms in suits who are not in those neighborhoods, but the decisions that they make impact whole communities. And so it happens on a week by week basis, right? They're just, there's more month at the end of their money. right? And people are just not understanding the economic forces that are impacting them. And I would say that they should take that money to invest in their own knowledge and understanding, get into the rooms where people are doing the type of things that you want to do. And then, as far as by way of investing for the long term, it's a lifestyle. And when I say it's a lifestyle, I mean that you gotta make investing like your bill. Like you gotta pay yourself first, right? You gotta treat it like a bill. So I always tell people that, I'm investing for the Palmieri that I have yet to meet, right? I'm investing for the Palmieri that is 10 years out. I don't know what he's going to need, but I can promise you this. He's going to need more money than he's got right now. So I would tell that person they need to be making recurring investments, right? They need to make it a habit. They need to make some sacrifices so they can feed their investments more. Because if you feed your investments will ultimately feed you. And it's not about what your investments can do for you today. It's about what your investments can do for you when life throws those curveballs at you that you didn't see coming, right? Whether it be a change in employment, a change in marital status, a change in your health situation, a change in your family style, right? Or your family's size, right? You got a baby, you got children, now you have mouths to feed, right? Or you had a child, so now maybe you need more space. So now you buy a bigger house.
Yeah, I
So
agree.
I'm
I
saying it from a
agree.
position of I would say that, 10 to 15,000, it's all relative, right? It's relative to the person. But if it was me, I would tell them to invest in education first and educating themselves. Because when you educate yourself on the world of investments, you increase your confidence level. And when you increase your confidence level, you can make intelligent decisions that will
That's
compound,
key.
right? It's not the one decision that changes everything. It's the compounding of good decisions over and over and over again that leads to that lifestyle, that greater lifestyle that we're all seeking. You know what I'm saying?
Well said. Well said. I
I don't,
totally agree.
I don't know how else to
Don't.
say it. Listen, if I love you and you in my proximity, I'm gonna grab your phone and I'm gonna set up recurring investments. If I love you, and anybody that sees this that knows me personally knows for a fact. Sometimes I tell people, yo, you can't talk to me no more if I see you again and you don't have a recurring investment going on,
Yeah.
because that person's emergency is not my problem to fix. Meaning, when they run into a situation, my gosh, this happened. Listen,
You gotta. I agree. I agree with you totally. You don't want to do what I did and pay tuition because that's what I did. And luckily I was in a position to do that. Along the process in the beginning, my wife and I we started going to Rich Dad Poor Dad seminars, which was the
yeah, you
beginning.
mentioned.
It just opened up my mind and my eyes. And one thing you said that was really is building that confidence, because confidence is definitely a key point. Because when you go into something shaky and you don't have that belief in yourself and that what you're doing, it's never going to turn out right. You know what I mean? You're going
No,
to constantly go through the ups and downs, the losses and the roller coaster. When you're confident and you have a system, discipline and a system, the recurring investment, then that's when you start seeing things grow and things play out the way it's supposed to. So that's definitely great advice that you gave.
yeah, absolutely, fam. I can't like that's you know that's what I would tell somebody if they were talking to me. I'm sitting here, they tell me, oh, they got this to invest. That's how I would approach it. I would say, okay, let's really get let's really understand where you're at as far as your education with investments, right? Because if you don't understand, why you are making these investments, then you won't stay committed. You know what I mean? And then the thing is, as far as investments is concerned, it's a commitment, and it's a commitment to yourself. It's not a commitment to anybody else, but to you, your family, and your loved ones. You know what I mean? That's it.
Me, I'm big on education. I'm big now on learning. Like I'm read books constantly. I'm listening to different podcasts. Just learning every day, learning something new. So that's definitely
Yeah,
where I want to
forever a
go with
student,
it.
man. Forever a student. You know what I mean? And it keeps your brain sharp. You know what I'm saying? And it makes you a well of information, so that when you come across somebody that you believe could use that information, you can pour into them too. You know what I mean?
And that's also key too. Spreading the wealth, spreading the knowledge. I have friends now who, even when we started the podcast, were like, yo, I love what you're doing, man. Like I've got my Robinhood account. I've been learning and buying stocks and doing this. And it's like the conversations are different now. You know what I mean? I like
Yeah.
that. Because to be honest, there's a lot of people who, the distance just grew so much because what are we talking about?
Right. 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 Right.
Now I'm seeing a lot of people, their conversations are changing, and we're speaking more, talk that I like to talk now. We're talking more about investments, talking more like real life stuff, and it's great to see that. And it also comes from me constantly sharing the knowledge. I'm learning something, and sometimes, honestly, I'm speaking to people. Sometimes like, yo, maybe they don't even understand what I'm talking about. They're not even. It doesn't even seem. But a lot of times, even though it's not reciprocated at that moment, it's sinking in. So never think that you pouring out to somebody else is you're just wasting your time. It might not, show its fruits right there, but as time goes by, it starts to sink in, and you'll start to see in certain people that really want to change, you'll start seeing the changes in them. And that's why, it's always great to pour into other people. That's definitely a key.
Yeah, I'll tell you like this, man. People jest at me. I've been made fun of. They're like, "Yo, man, you like a pastor. Yo, you be preaching this stuff." And I'm like, "Listen, man. If you found something good, you would tell people about it too.
Amen.
You know." So I would say like this. I know for a fact that I'm reaching. So I know for a fact that I reach people because I get, DMs or I run into people I haven't seen in a while, and you know, they show me, hey man, I started investing in this and you changed this around for me, and I didn't even know I could do that. People would tell me some of these things. I forgot about that. Just today I was talking to a real estate investor. Same thing we talked about, as far as, hey, you have excess cash after you pay your mortgage. What are you going to do with that excess cash? We talked about annuities. They were like, what? You could do what? I said, yeah. You're talking about a guaranteed income stream. You're talking about a guaranteed rate of return. I'm like, man, guys, there's some financial concepts that, again, we just need to keep sharing. One of my mentors taught me that if you share a good idea long enough, it'll fall on good ground.
Right. We wrap up. Guytho the Great. It's been another Good Money podcast.
Good money, pal. Good money, pal. Good money podcast. Thanks for tapping in with us.
We'll be back with some more.
All right, y'all.
Yeah, catch the lessons, secure the blessing. We gonna keep that. We gonna put that up somewhere.
Yeah, I like that. I like that. Catch the lessons, secure the blessings. I like that. All right.